Everyone. If you've been looking at the market lately and just felt like the old rulebook has been thrown out the window, well, you're not wrong, and you're definitely not alone. Today, we're going to dive right into that chaos, figure out what on earth has changed, and put together a real playbook to help you navigate it. All right, let's just get right to it because this is the question I think is on every single investor's mind. The daily swings, the whiplash you get from just reading the headlines, it all feels so much more random and unpredictable than ever before. But what if I told you this isn't random? That there are actually some really powerful structural forces at work here. Understanding them is the absolute first step to getting your bearings in this new world.
And wow, this quote really just nails it, doesn't it? It gets right to the heart of what's going on. We've seen this fundamental shift away from patient, buy-and-hold investing toward a culture that just craves that daily action. And listen, this isn't some minor trend. It has completely rewired the deep-down mechanics of how the market operates.
So let's dig into what this new normal really is. Because the volatility we're all feeling, it's not a temporary glitch. It's not a bug. It's a permanent feature of our current landscape. And it's being driven by these massive, persistent forces happening all around the globe. First off, you gotta look at the world stage. Geopolitics isn't some background noise for investors anymore. It's a primary driver of real, fundamental moves in the market. We're seeing brand new alliances form, global trade routes are shifting, and there's just this constant level of tension. All of this creates a permanent backdrop of what we call FUD. That's fear, uncertainty, and doubt. And it directly attacks these long-held beliefs, like the idea that the US dollar will always be king. But you know what? Global uncertainty is only half the picture. Beyond the big headlines, there's this incredibly powerful mechanical engine that's driving those insane daily swings. And this is the part that has fundamentally changed the very structure of trading itself. And this is the engine right here. 0 days to expiration options, or as everyone calls them, 0 DTEs. Just think of them as hyper short-term bets on where the market is going to be by the time the bell rings at the end of the day. And they're not some niche product for pros anymore. They've become an absolutely dominant force.
I mean, just look at the sheer scale of this. Over half, and just let that sink in for a second, over 50% of the daily trading volume is now being driven by this kind of rapid-fire speculation. It's a force so huge, you simply can't ignore it. And it's the main reason we see these massive mechanical jolts of volatility day in and day out.
So here's the crucial point. It's the cultural shift this machine has created. The traditional investor, maybe from the boomer generation, was all about long-term, steady, low volatility growth. But today's new gamblers, it's all about that daily dopamine hit, that short-term action. This whole buy the dip culture basically guarantees that volatility isn't just a side effect anymore. It is the main event.
Okay, so we've pretty much established that volatility is here to stay. Now, let's try to reframe it. What if all this chaos isn't something we should be afraid of? What if it's actually the price you have to pay, the price of admission for achieving truly great returns over the long run?
Let me show you a really powerful example. Let's just imagine you invested $100,000 on March 9th, 2009. Now, that was the absolute bottom of the market during the Great Financial Crisis. It was the moment of peak fear. The headlines were absolutely terrifying. And if you had done nothing, if you simply stayed invested through all the craziness until today, that initial 100 grand would have grown to over $1.35 million. That's a 16% return every single year, totally crushing the historical market average of about 10%. It sounds amazing, right?
But yeah, what was the catch? What did you actually have to live through to get that incredible result? Because I can promise you, it was not a smooth, easy ride to the top.
This was the catch. To earn that return, you had to sit there and stomach 12 different drops of 10% or more. That's nearly one big drop every single year. And twice in that period, you had to watch your portfolio suffer these gut-wrenching losses of over 20%. And this right here, this is the key takeaway of this whole thing. The price of admission for getting superior long-term returns is weathering fear. It's dealing with uncertainty, and it's seeing those big, scary red numbers in your account. The cost is emotional distress. And you know what? Accepting that is the very first step to becoming a successful long-term investor in this market.
All right, so now that we've accepted that volatility is just part of our reality, let's switch gears. Let's go from a defensive mindset to an offensive one. Where are the massive, long-term growth opportunities that are unfolding right now? The ones that are kind of disconnected from all that daily noise?
Okay, so let's run through the major themes shaping our future. First, in a more fractured world, defense spending is just going up. And in a more digital world, cybersecurity is absolutely non-negotiable. Then you've got the AI revolution, which is changing literally every industry. But guess what? It can't run without a massive investment in our power grid and energy. At the same time, shifting demographics mean the rise of Asia continues to be a huge driver of global growth. And finally, holding all of this together is the urgent need to refresh our aging infrastructure. These are the multi-trillion-dollar trends you want to focus on.
Now, let's dive a little deeper into AI, because it creates something we call the efficiency paradox. See, on one hand, when corporations deploy AI, they get huge efficiency gains, higher profits, and, yep, higher stock prices. But the flip side of that coin is a potentially weaker consumer, because those efficiencies often lead to layoffs and a much tougher job market. And this whole dynamic could eventually push the Fed right back into a rate-cutting cycle.
So who are the biggest winners in this whole AI era? They're what we call dual compounders. These are the companies that are just perfectly positioned. They not only use AI to make their own business more profitable, but they also sell their AI tools to other companies, helping them get more efficient. They basically get to win twice from the exact same powerful trend.
Okay, let's bring it all home. We've defined the new normal, we've taken a look under the hood of the volatility machine, and we've pinpointed the winning themes. So now, how do we boil all this down into a simple, actionable strategy you can actually use?
Here it is, your 3-step playbook. Step 1. Start seeing widespread fear not as a signal to run for the hills, but as a contrary indicator, a sign that an opportunity might be just around the corner. Step 2. When those great companies, the ones tied to those big themes we talked about, go on sale, buy into that weakness slowly. And step 3, and this is absolutely crucial, don't try to be a hero. Don't try to catch the absolute perfect bottom. Nobody can do it consistently.
You know, it all comes back to this classic principle for a reason. Because it's true. The absolute best opportunities are born when fear is running wild. And right now, there's not a lot of euphoria out there, is there? Fear and uncertainty seem to be everywhere you look. And for a long-term investor, that is your signal to start paying very close attention.
So I'm just going to leave you with this one question. We've laid out the map for this new volatile market. We know the challenges for sure, but we also know where those long-term opportunities are hiding in plain sight. So the only question left is, in a world that seems full of fear, where are you going to find yours?